Hi, welcome to mywealth.com. I'm Bob O'Brien, the head instructor with the courses. Welcome to the blog for the day, the Fed decision, inflation versus deflation. Now, the Fed will be meeting over the next couple of days, and it's going to be real interesting to hear any actions that they take, what comes out of that meeting, and especially the verbiage that they use, what type of wording they use in regards to what's going on in the economy. Now, the inflation fears in the market have really revved up over the past couple of months, much more so than in the past. But it appears that the Fed is still much more concerned about deflation.
Be certain to check out the written blog at www.mywealth.com/blog. I got some great links for you in the written blog, so make certain you check that out if you're picking this up on YouTube. Okay, the bottom line is that the Fed just cannot let long-term interest rates get too high, and therefore smother this already weak economy. The U.S. economy is still facing rising unemployment, massive foreclosure, and historical credit card defaults. Now, the Fed is not going to raise rates, but there will be some very strong language in regard to them moving away from buying more treasuries. They will continue to help out the banks and buy up a lot of toxic assets such as bad mortgages and so forth. But the Fed is going to look to bring back some of the fears of deflation into the market, the kind of fears that do keep oil prices from getting too far out in front of themselves, and keeps the dollar afloat. As a concern, deflation is still winning in the short term, but inflation is definitely going to win the war long term. These type of things we like to go through in our courses, so make certain you check them out. Don't wait, get into our investment course or our currency course. Get educated, get to www.mywealth.com.
The fact of the matter is, prior to the economic crisis that really landed down, say, in 2008, we really had a lot of inflation, although we may have not been tracking it properly or whatever the case may be. But we had heavy inflation in terms of real estate prices, healthcare, and education costs. So to think that from going forward from this point on, we're going to have some sort of inflationary harmony is really a far stretch. Commodity prices are going to be much higher. That's something that's going to be a long-term trend, oil and obviously other commodities. And that's something that countries like the U.S. are going to have to get used to. And it doesn't bode well for them fundamentally, as opposed to other countries that are commodity exporters like Australia, Brazil, and Canada, where it will bode well for them. These are the type of things we like to go through in our courses. Make sure you check out our investing course. It's very affordable, $25. Our currency course, only $19.99. So make certain that you check those out. Thanks for being with me today. Again, my name is Bob O'Brien, and have a great day.